All right, good afternoon, everyone. Welcome to our retirement and benefits session here with our CTA pension plan. This is our last session of the month for our Financial Awareness Month, so thank you for joining us today. I do want to introduce Angel Trevino, who is going to give us our presentation today and answer any questions that you guys may have at the end of the session. She is the senior benefits rep for the retirement plan for the CTA. She has been with the pension office since 2013. Their small office of 12 works together to prepare and process retirement benefits, disability allowances, survivors benefits, death benefits, refunds of contributions, and more for plan participants and their families. Together, they handle all pension-related inquiries for 11,000 active employees and nearly 9,000 retirees. Direct contact information will be available towards the end of the presentation for anyone who would like a one-on-one phone call or in-person appointment. We will also allow some Q&A towards the end of the session, so if you have any questions that are popping up while the presentation is going on, please feel free to pop that in the chat, and then we will get to it at the end so that Angel can answer your questions. You can see Angel on the screen there. So now you put a face to the name and you guys know all the good stuff coming from the pensions department. At this time, I'm going to go ahead and hand it over to you, Angel. You can feel free to take it away.
Yep. Thanks, Jess. Hi, everyone. How are you? Thank you for joining me here today. Thank you to the wellness team for having me again. I'm really looking forward to this presentation. My name, as Jessica said earlier, is Angel Trevino. I'm the senior benefits rep at the CTA retirement plan. Today, we're going to go over some key information regarding the retirement plan and the retiree healthcare trust. And my goal here today is to allow our CTA employees to gain a better understanding of their pension and healthcare benefits. I'll outline some of the requirements that are needed for benefits to begin, and we'll discuss some options that you might not even know are available to you. So if you hang tight, as Jess said earlier, we're going to have questions at the end. For now, I'm going to go ahead and go off camera. We're going to focus on the slide and get into it. Okay, so we can go to the next slide, please. Hey, Christina, can we go to slide 2? Sorry, everyone, just give us one moment. There you go. Thank you so much. Okay, as always, I like to start with a little bit of history regarding the plan. The retirement plan for CTA employees was established in 1949. It was originally negotiated for members of Local 241 and 308. On October 1st of 1952, the Chicago Motor Coach Company was purchased by the CTA, and employees of the Chicago Motor Coach Company were added to the plan on January 1st of 1953. The purpose of the plan is to provide retirement benefits for eligible employees of the CTA. This plan is a defined benefit plan, which means that the plan pays a certain amount of benefits every month to those participants who qualify. Contributions to the plan and earnings on the plan investments are held in trust for exclusive benefit of plan participants. We can go to slide 2. Eligibility. In general, those who have 12 months of continuous full-time service become eligible to participate in the retirement plan. Today, we'll be discussing the various types of retirement options that will become available to you with the plan over time. Options for retirement depend on when an employee was first hired. So let's take a look at the eligibility chart on the next slide. Okay. After becoming a plan participant, the minimum number of years of service and age that you need to qualify for benefits will depend on when you were first hired. So on your left, you'll notice the words normal retirement. what is a normal retirement? Normal retirement is a retirement that takes place on or after an employee has reached their 65th birthday. There are three major benefits to retiring after 65. First, there are no early retirement penalties applied, regardless of years of service. Second, for an employee 65 or older, there is no minimum number of years required in order to retire. And Christina, if you can go to slide 4, please. And third, if you retire after reaching age 65, medical premiums are significantly lower due to Medicare eligibility. Now, I understand that not everybody wants to work until they reach age 65. Thankfully, each tier has 2 retirement options to choose from. There is an unreduced pension option and a reduced pension option for each tier. Let's examine the chart on the right to see what each tier requires for you to earn an unreduced pension versus reduced pension. And by the way, this chart is also included on the front page of the retirement plan statements that are mailed out annually. So if you didn't receive yours, went out about 1 month ago, please do give us a call and we'll make sure that one goes out to you. So if we look at the chart on the right, those employees that were first hired on or before September 5th, 2001 are eligible for an unreduced pension at any age as long as they retire on or after completing 25 years of continuous pension service. An employee hired under that same time frame would also be eligible for a reduced pension after age 55 if they had at least 3 years of continuous pension service. The penalty, however, for retiring under the terms of a reduced pension is 5% for each year under 65. So for example, if an employee hired under this time frame decided to retire at 55 years old when they very first could, the penalty that would be applied would be 50% or 5% for each year under age 65. And that penalty remains in place for the remainder of that retiree's lifetime. Now, I've mentioned the term continuous service a few times up to this point. So let's look closer at what constitutes continuous service on the next slide. So continuous service with the CTA generally refers to the length of time that an employee has worked for CTA without any significant breaks in employment. Continuous pension service is calculated from the date an employee first began contributing to the plan until the day of their retirement or separation. For those hired on or after May 16th of 1980, participation in the plan begins after 12 months of full-time continuous service. For those hired before May 16th, 1980, first of all, why haven't you called me yet? But secondly, their participation began as soon as they became full-time. They did not have the 1-year waiting period. Part-time employees do not participate in the retirement plan. The current contribution percentage is 13.795% for those who are contributing, while CTA contributes double, 27.59% for each participant. Continuous service includes the following: authorized leave of absence for up to 3 years, layoff or furlough not exceeding 3 years, termination followed by reinstatement within 3 years, and time spent in the armed forces for up to 4 years. Any absence exceeding the above-mentioned timeframes may result in a reduction when calculating your future pension service. So if you were gone for a period of time, even if you were terminated and brought back, it's always good to give us a call because your termination might not always be considered towards the pension as service that you can use towards a pension, even though you can retain your original hire date and plan start date. So now that we've discussed the eligibility requirements for regular pension, let's take a look at the next slide where we'll go over disability pension and its differences. Unlike a regular retirement, a disability pension is not penalized based on age or years of service. There are no minimum age requirements in order to apply for benefits. There's also no minimum age or number of service years required in order to enroll in the health care. Eligibility requirements for disability are as follows. If you are disabled due to a non-occupational accident or illness, you must have at least 10 years of continuous pension service in order to apply. If you are disabled due to an occupational accident or illness, you must have at least 5 years of continuous pension service in order to apply. You must be unable to return to your regular employment with the Chicago Transit Authority, and you must have already received 26 weeks of either short-term disability or workman's comp prior to applying for disability pension. There is one more retirement option that I'd like to share with you today, and that is the option to take a deferred vested pension. This option is not for everybody, but it's definitely worth taking a look at. Let's go to the next slide. The first question asks, what happens if an employee leaves employment at the authority after they've completed 10 or more years of continuous service? If you're a CTA employee and you become separated after having contributed to the pension for at least 10 years, but you don't meet the requirements for an early retirement, you'll have the option to apply for a deferred vested pension. This deferred vested pension is a monthly pension that begins on the first of the month after you've reached age 65. This pension would be calculated by using the average and the years of service that you had at the time that your employment was terminated. The vested pension is also a good option for those that do meet the requirements for an early reduced pension, but they would rather delay their pension benefits until the age of 65 in order to avoid an early retirement penalty. Alternatively, an employee may take a refund of contributions, the lump sum of their pension contributions, if he or she waives any future pension benefits that they've already earned under that service. So again, if you have more than 10 years of pension service, you will have the option of taking your lump sum when you separate versus leaving it where it is and collecting a monthly pension benefit for life, beginning at age 65. The second question asks, what happens if an employee leaves the authority before they've completed 10 years of continuous service? If an employee leaves the authority with less than 10 years of pension, the employee can receive a refund of any pension contributions with interest at the time that they are separated from service. The refund can be made directly to the former participant or rolled over to a tax advantage plan. An employee will never receive the refund of the portion of contributions that were made on behalf of CTA. Let's go to the next slide, please. A popular question that our office gets all the time is, do I have an option regarding participation in the plan? The answer is, it depends. For employees not represented by any union, in other words, exempt, non-bargain for employees, you may opt out of the plan before or after you begin contributing. All other employees must participate. Until recently, the action of opting out of the plan was permanent. Today, those who have opted out in the past will have one opportunity to opt back in. The gap in between the time the contributions were first made and the time the contributions were restarted will not be considered when calculating future benefits. So a little bit more on this. Any period of time that you were not contributing to the plan will not count as future pension service. And there is also no option to buy back the time in between when you first opted out and opted back in. And again, that's for those who opted out in the past and did not take a refund of their contributions. If you are someone who opted out of the plan prior to making any contributions, your pension service will simply begin at the point that you opt back in. If you opted out before that 1-year full-time anniversary, the day you opt in will be considered day 1 in the plan. Opting out of the pension a second time will be a permanent action. A refund of contributions will be available to those who do not intend to opt back in to the pension in the future. So if you're someone who is interested in either opting in, opting out, or if you'd just like more information on this topic, please do feel free to contact our office. We can go to slide 9. Okay. Now we enter the healthcare portion of our presentation. I know that several of you have questions regarding the healthcare and the Retiree Healthcare Trust. So a little bit on that. In January of 2008, legislation was passed by the Illinois General Assembly that authorized the establishment of the Retiree Healthcare Trust, also referred to as the RHCT. The primary responsibility of the RHCT is to provide and administer healthcare benefits for CTA retirees, their dependents, and survivors. All active employees of the CTA, whether you're full-time, part-time, temporary, union, non-union, must contribute to the RHCT. The current contribution rate for the Retiree Healthcare Trust is 1% of your gross earnings. This amount can change based on the funded status of the RHCT. The contributions made to the Retiree Healthcare Trust are intended to offset the cost of the monthly healthcare premiums in retirement. Let's look at slide 10, where we'll go over the age and service requirement needed. So the age and service requirement needed to be eligible for healthcare benefits. If you look at the chart on the right, you'll see the term eligibility credits. Eligibility credits are used to determine eligibility for healthcare coverage. They are calculated by using your credited service from the date of hire plus continuous service with CTA from 1/18/2008 until the point that you separate from service. Depending on your age and years of eligibility service, you may or may not be able to enroll in the healthcare at the time that you retire. For those under age 65, you must have 20 or more years of eligibility service and be at least 55 years of age in order to enroll in the plan's insurance at the start of your retirement. If you retire at 65, you may enroll in the plan insurance if you have at least 10 years of eligibility service. And if you retired under age 65 but you had at least 10 years of eligibility service, you may enroll in the plan's insurance beginning at the age of 65. And for you youngins out there, if you retired with more than 25 years of service, but you were under age 55 at the time that you began your pension, you will be able to enroll yourself and family on the health insurance after reaching your 55th birthday. And if in any case you have less than 10 years of eligibility credits, you will not qualify for health insurance at any point throughout retirement. Those who are not eligible for healthcare coverage will be eligible for reimbursement of any healthcare trust contributions that they make via the healthcare reimbursement account or the HRA, starting at 65. Enrollees in the HRA will receive a debit card to be used on medical expenses until that individual account of healthcare trust contributions have been exhausted. The HRA debit card is also available to those who do qualify for insurance through the plan, but feel that the debit card is a better option for them. And we're going to be taking questions after the slide is complete, so please, if you will be patient, I will get to as many questions as possible after the slide. How are the monthly, if we go to page 11, we'll go into the premiums and how they are determined. So simply, the Board of Trustees and the Retiree Healthcare Trust determine what premiums will be from year to year. They're responsible for creating a plan and design setting the premiums for retirees, dependents, and surviving spouses. I'm happy to report that in the last decade, I've not seen an increase in healthcare costs. And this year, we've actually added vision and hearing to both plans at no extra cost. And because the board negotiates on such a large number of retirees, prices offered through the retirement plan often come in at a lower cost than any individual might find on the outside. But participation in the plan's insurance is optional. Let's go to slide 12. We'll go into a little bit more on the type of insurance that's offered. So what kind of insurance is available to eligible pensioners? The CTA Retiree Health Care Plan includes medical, prescription drug, dental coverage, hearing, and vision, as well as for their surviving spouses and eligible dependents. Currently, the Retiree Healthcare Trust provides access to Aetna. You would have your choice between the PPO and HMO equivalents for those who are not Medicare eligible or under 65. Once a pensioner and their dependent become Medicare eligible, the Healthcare Trust provides access to the Humana Medicare Advantage plan. The Humana offers the PPO or HMO options as well. Minimum age and service requirements must be met in order for a retiree to become eligible to participate in the plan's insurance. An eligible retiree may enroll into the insurance at the point that they retire or during open enrollment, which is typically from November 1st to the 15th. There are also certain qualifying events throughout an employee's, a retiree's lifetime that may allow them to enroll onto the insurance even outside of these two examples. So if you have any questions on that, happy to answer. And lastly, for those considering retirement who are currently Medicare eligible or have Medicare eligible dependents, you are encouraged to reach out to our office a few months prior to your projected retirement date. And that's so that we have enough time to get that information out to Medicare and assist you in signing up for a Medicare Part B in advance of your retirement. Whether you need insurance through our plan or outside, you'll still need to sign up yourself and any eligible dependents onto Medicare Part B before you retire in most cases. Let's go to slide 13, please. Okay, what will my monthly premium be for healthcare coverage? So every employee is different. Everybody's building on their own healthcare trust premium service. There are also other factors that go into determining how much your premium will be. So some of those are how much healthcare trust premium service that you have at the point of retirement, the medical plan that you select, whether it be HMO or PPO, the coverage level that you select, such as individual or family, and whether or not you and your spouse, your children are Medicare eligible will drive those costs. So the method of determining healthcare trust premium service is as follows. For hourly employees, retiree healthcare trust premium service is calculated by using your pension service through January 17, 2008, plus your total hours worked after January 18, 2008, divided by 2080. So it is possible for an hourly employee to have more healthcare trust premium service than pension service if they're someone that works a lot of overtime. And on the other side of that, if you're an employee who misses a lot of work due to illness or injury, it is possible that by the time you're coming up on your 25th year of pension, you could be a year or even several years shy in the healthcare trust category because of that time missed and those hours that were not added to your healthcare trust premium service. So yes, if you are off of work, you do not contribute to the healthcare trust. Therefore, you will fall behind. And for salaried employees, the healthcare trust premium service is calculated by using your credited service with the retirement plan up until January 17, 2008, plus continuous service, so normal service after 1/18/2008 through the end of employment. So in this case, a salaried employee is off, misses work because their salary and their hours cannot impact them in a positive or negative way. They will simply have the same service for their healthcare premium costs as their pension service. We will use their pension service to determine that that premium tier that they fall into. We can go to slide 14, please. Again, just want to make sure everybody understands the eligibility. So the chart before you outlines what options you may have in regards to the health insurance versus the HRA debit card. And as we discussed earlier, you must meet the minimum required age and eligibility service in order to enroll in the plan's insurance. At the end of your career, you may have a choice between the healthcare reimbursement account and health insurance. You cannot enroll in both the healthcare reimbursement account and healthcare coverage offered through the Retirement Healthcare Trust. If you elect to take the healthcare coverage, the contributions that you made to the Retiree Healthcare Trust will be used to offset the cost of your monthly healthcare premiums. If you enroll onto the healthcare reimbursement account, you'll be provided a debit card linked to the account which holds your balance of RHCT contributions. Your reimbursement account can be used to pay for medical expenses for yourself and any eligible dependents as long as that account holds a balance. A little bit more on this topic on the next slide. Okay. A little bit more about the HRA itself. If you are eligible for HRA debit at age 65, you are eligible even if you're not eligible for a pension. If you opted out of the CTA pension or received a refund of your pension contributions, you will not be a retiree, therefore you will not have the insurance offered to you. In that case, you are only eligible for the HRA. You may be eligible for immediate healthcare coverage if you receive a disability allowance, regardless of age. So anyone who has applied and approved for disability pension, again, they do not have to wait till they're 55. They don't need a minimum number of service years in order to enroll in the insurance. They will have the option to enroll onto the insurance at the point that their disability begins, and again, through the open enrollment process. But the same rule applies here. It's either or. So if you're on disability, you will be made aware that if you take the health insurance, you are now voiding out your option to take the HRA debit card in the future at age 65. And why? Because those contributions to the healthcare trust are being used to keep your premiums low right from the start of your pension. And there are certain part-time or temporary employees who do not meet the requirements for a pension. They may be eligible for healthcare coverage. So if you've started as a part-timer, never quite transitioned over, you've still been paying into the healthcare trust, you're building eligibility credits. And at the end of your time with CTA, you might have built those minimum 10 years of credits. And depending on your age, you may be able to start your health insurance benefits, even if you don't have any pension benefits. So that's something that you should be aware of. And what you don't see here on this chart is that, and I just want to provide for clarity, is that no employee may apply for the HRA debit card while they're still actively employed. So even in cases where you've already reached age 65, you do have to be separated from employment in order to apply for your HRA debit card. Okay. Next slide, please. So for more information, again, on all topics that we discussed here today, please feel free to log onto our website, ctaretirement.org, where you'll find some of our most frequently asked questions and answers, our current healthcare guidebooks, which will go into a little bit more detail on the insurance that's offered to our current retirees. And there's even a pension estimate calculator that you can have a lot of fun using. For any, questions that you may want to speak to a live person here at our office, this next slide here is going to have all of our contact information. We're here Monday through Friday from 8 to 4:30. Again, so I highly do encourage you to go onto our plan website. There's a lot of information there. Okay. So again, we are a small team, and our responsibilities are somewhat divvied up. There's a few of us that handle all of the pension and disability inquiries. There's another set that focus more on the refunds or the benefits to those who have been terminated. You are welcome to find this information on our website. All of our direct numbers are here. So if you're having a little bit of trouble getting through via that main number, you are more than welcome to reach out via these direct numbers that are on our website. Okay, and just want to leave you with this. Many employees spend their lives working hard and dreaming of the day that they can finally retire, but planning for retirement is so important. You have something great here that you can build on. Please take the time to plan your retirement out. Reach out and ask questions. We are here as a resource to help you set and achieve your retirement goals. This concludes today's presentation. Thank you all again so much for investing your time with me here today. If anyone has questions, I believe Jess or Christina at the wellness team will be happy to pick them out one by one, and I'll do my best.
Awesome. Thank you so much, Angel. We do have quite a few questions in the chat here, so I'll go ahead and read those out for you so that you can answer those. If there's something you can't answer, that works as well. I just want to let everyone know that this session was recorded, so we will send this out. It'll have the slides on it so that you guys can refer back to this. That way you can also check out the slide that has all of the names, emails, and phone numbers on it so you can reach out to the pension team directly. All right, we'll go ahead and get started with our first question I have here. How do you foresee CTA's pension being affected by what is happening in Washington, D.C., either positively or adversely?
Well, I don't want to give, my own feelings on it, but I can say, after sitting in some of those board meetings, the health of the plan is closely monitored by our actuaries. And annually, they send out reports to the board members. Financial reports are presented to the Board of Trustees on a monthly basis. And there are projections that are in place so that we are able to keep in the plan on track. There are guidelines in place, and they are able to run projections based way in the future. So they have plenty of time to make adjustments if needed. So I feel confident that the plan will continue to be monitored by, expert actuaries, and those who are in charge of finances are going to be able to make those decisions to keep the plan safe.
Awesome, thank you. All right, next up, we have another question, and it wants to know if you retire before 10 years, are you eligible for a pension?
If you're under 65 years old, you can retire with any number of years, even months. It'll be a very small pension, but yes, you can retire with less than 10 years if you are over 65.
Okay. Next up, we want to know, can you explain the HRA?
Yeah, sure. So similar to the contributions that you're making to the pension, which are meant to be able to pay you a monthly benefit for the rest of your life, you're contributing to the healthcare trust so that when you retire, you do not have to pay for the full cost of your insurance. You're going to be paying a fraction of what that cost actually is. So, for example, our retirees who have between 25 and 30 years of service pay a PPO premium of $145 a month. The true cost of that insurance is $1,080 per month. So the difference between what they're paying and what the premium actually is deducted from their healthcare trust. And little by little, the healthcare trust account for each individual employee will run out. Just as the pension, you have enough funds on average to pay you out about 3 to 5 years if you want to look at just what you contributed versus what you pull out. Of course, these funds are invested over time, and we have more than enough to pay you, but the healthcare trust was necessary because there was a realization that due to high costs of healthcare premiums, that we were not going to be able to pay for these premiums and allow our retirees to have free health insurance. So what they do is they allow you to contribute to this fund while you're active, while you're making those higher dollar amounts. And then at that point that you retire, when you're taking a huge cut in what you're used to receiving as your pay, you're not also slammed with those high cost healthcare premiums. So it really does make all the difference. I mean, can you imagine having to pay $2,000+ for your family plan with 25 to 30 years of service when your pension's $4,000? It would prohibit so many from being able to retire, period. So I think it's a wonderful thing that you get to be a part of. It's definitely going to pay off in one way or another. If you have any additional questions, you're welcome to reach out to me personally.
Perfect, thank you. All right, next up, we'd like to know if an employee separates prior to retirement and is refunded contributions, does that include the 28% CTA contribution or only the 13.8 employee share?
No, as we went over, you will only be receiving your contributions with interest, never CTAs. CTA will end up paying out way more than what you contributed on average if you do stay and take a retirement benefit, but those benefits are limited to our retirees. So no, you would leave with only what you contributed plus your own interest.
Copy that. All right, what percentage of eligible retirees at age 65 opt into CTA's retiree health insurance?
I don't have an average in front of me, but I'm going to say those who are already 65, the majority of them take the insurance. But if you're someone who's already 65 at the point that you retire and you, let's say, got a late start with CTA, the difference between what the actual cost of your premium is versus what you'll pay will be very, very small. So, I will definitely make sure that we go over both options in that room. It is a permanent decision. And at the end, if they need to have more time to do some research, get some premium quotes, that's always encouraged. But I would say the majority, for sure, do take the insurance over those who take the debit card when they're already 65.
Okay, sounds good. All right, next question here is, if the HRA account is not used before death, will the balance go to a beneficiary?
The HRA debit account balance can only be transferred to a spouse, and you must have been married to the spouse 1 full year before you retire or before you separated from service. So it's the same rule that's implemented for those who are looking to put their spouses or dependents on the insurance. You either you have to be married to that person before you retire 1 year, or you cannot use that debit card. You cannot enroll them onto the insurance. No children can inherit an HRA account balance. You can use the card on your dependent children who are eligible as long as you're living, but the the balance cannot be transferred to anyone except a spouse.
Okay, sounds good. All right, next question we have is, can pension payments be divided between two banks or a bank and a credit union?
We are currently working on the option for you to have multiple banks. We're also working on an online portal for our retirees and for those looking to send us updated beneficiary forms, amongst other things. So we are excited to say that is coming up very soon.
Very exciting. All right, this next question is about vacation allowances. This person is an exempt employee who is planning to leave early or mid 2026. They receive vacation allowance on January 1st. Will I need to take my vacation time prior to retirement, or will I be penalized for taking that vacation time?
I'm not sure about the penalties, and I can't quite answer this. I'm sorry. You might have to direct any vacation questions to payroll. As I understand it, as a salaried employee, you have to use your vacation time before you retire or you lose it, but I'm not 100% sure.
Okay, sounds good. For whoever asked that question, just make sure you check with payroll on that. And then if you have any questions about the pension afterwards, you can contact the pension office. All right, our next question here is, I am not 55 years old yet, but am retirement eligible. If I retire June 1st, is the current insurance good until the following month, or is it terminated immediately?
Well, again, we don't administer healthcare benefits to those who are actively employed, but from what I understand, you are able to keep the insurance up until the day you retire. You might want to check with benefits on that, however.
Hey, I'm sorry. Hi, Angel. This is Sylvia from Benefits, and
Hey,
I'll answer that.
Sylvia.
Yeah, I'll answer that question.
Sure.
So, any employee that leaves CTA under any circumstance, the day that you leave the CTA, your insurance ends at 11:59 p.m. So, if you leave tomorrow, your insurance ends tomorrow at 11:59 p.m.
Good to know. Thank you so much.
You're welcome.
Thanks, Sylvia. All right, next question we have here, is there any scenario that CTA employee can get full HRCT at or under the age of 55?
Okay. Are we talking about RHCT in the form of healthcare or a debit card? I'll answer both. Under 55, you can enroll into the insurance if you are on disability pension. There's no age minimum. For the debit card, HRA, you must be 65 and separated from employment, no exceptions.
Okay. Hopefully that answered your question. If not, you can pop a follow-up in the chat and we'll get to that shortly. All right, next question here wants to know, is pension taxed after retirement?
Yes. Any contributions made to the pension after 2004, taxes were not withheld. You will be taxed on those contributions, on that monthly benefit portion of it when you retire. So you might see on your check statement, the bulk of your monthly benefit is taxable, and you might see a small portion of your benefit is non-taxable, depending on whether or not you joined the pension before or after 2004.
Okay.
You will only have to pay federal tax in the state of Illinois. Illinois does not require any state tax on this income. So if you're looking to move or you're in a different state, you might want to check your state tax laws on the type of plan that we have, the defined benefit plan.
Sounds good. All right. The next question wants to know, does Aetna insurance work outside of the USA?
There are some U.S. territories outside of the USA that are covered. I know Puerto Rico is a part of the network. I can tell you that you definitely can't use the HMO outside of Illinois and certain counties in Illinois at that. So if you wanted, I could provide you with Aetna's phone number, and they would be able to get that information out. Or you could relay your direct question if you're looking to move to a specific area of the, outside the US. I can always relay that directly to our Aetna contacts. You can email me my My email address is on our plan website, hravino@ctapension.com.
Perfect. Thank you. All right. Next question here we have is, if I have 17 years of service and am 65, what healthcare coverage might I be eligible for?
You would be eligible for the Humana because you are Medicare eligible over age 65. You would be eligible because you have at least 10 years of service. The tier that you fall under, whether it be the 15 to 20 or the 20 to 25, I'd have to look. If you're someone who worked overtime, you might be in the next tier up, which would mean that your premiums are lower. But to answer your question, those who are 65 plus or Medicare eligible are only offered Humana. You have your choice between the PPO and the HMO. Those non-Medicare eligible or under 65, you're offered Aetna. You have your choice between the HMO and PPO.
Okay. Next question here is, when should an eligible employee contact your office to apply for a deferred vested pension?
Technically, the rule asks that you apply for your deferred vested pension within 3 years of separation. So if you haven't already done so, we can make exceptions. We have done so in the past, but we're kind of trying to close that window and have people put in their applications when they should. So 3 years from point of separation. And you can do that here in our office.
Cool. All right, next up we have, if you receive military benefits, particularly for insurance, how does the reimbursement work if you are not going to opt in for retirement health insurance?
Yeah, it's, obviously no one plan is going to work 100% for everybody. And those who are military veterans are an example of those who, we've seen in the past not express any interest in either the HRA debit card or, the health insurance. And all I can say to that is those benefits are available to you. You can, again, use them on a wide variety of medical expenses in the event that the VA doesn't cover everything. And also, again, those benefits can be extended to your spouse. So if those benefits that you've earned, with the military only cover yourself, perhaps using these benefits for your spouse can make it worthwhile. But currently, yeah, if you want to participate, you are able to, but the rules are in place that you must participate whether or not you have some other options.
Okay. And then next up we have that they understand that you can only opt out once, but if I opt out of the pension, is there a time frame in which I have to opt back in?
There's no time frame that you have to opt back in. If you had contributed to the pension for a time before you opted out and you never took a refund of your contributions, you can opt back in at any time and you'll still have that small, whatever the amount of service was before you opted out. And you will start to build the moment you opt back in new service. But nothing can be done in that in-between time. You cannot buy service back. And if at any point you opt back out the second time, you are no longer eligible to participate. If you never opted, if you never contributed to the plan before you opted out, you would have no balance. And then when you opt in, you're starting right then and there. There's no waiting period. There's no limit of time that you have to opt back in. So if you're interested, do give us a call as soon as you can.
Okay, sounds good. Next question here is, can CTA ever change retiree health insurance to another company and end Aetna insurance?
Yes, they can, and they have changed the provider in the past. They negotiate with several different companies and they make the decision to go with whichever they feel is best for the plan.
Okay, sounds good. I can take a couple more questions here as we're nearing the end of our segment. The next one here is, when I turn 65, how does the RHCT work?
So if you're saying RHCT as in the debit card, because remember the Retirement Healthcare Trust is the fund that you contribute. Then based on your eligibility, you might be able to use that fund to give you a healthcare premium discount for life, or the HRA debit card, which would simply be the debit card linked to that account. So let's say at the point of retirement, if you are interested in enrolling onto the insurance, you'll enroll at that point. You are made aware that this means you're getting a discount on your insurance premiums for the rest of your life, or you can do that at a later time after you retire. If you take the HRA debit card and you're already separated from service, let's say you retired at 55, now you're 65 and you want that debit card, you're 100% sure you don't want the insurance. All you would have to do is you can call our office and we'll get you over to group administrators, which facilitates any changes after the retirement and also disperses those HRA debit cards. And you'll get your debit card in the mail within roughly 2 to 3 weeks.
Sounds good. All right. Next question we have here is, I understand the pension is taxed federally. Do we know the percentage rate?
There's no fixed percentage rate. It is based on your marital status and number of exemptions. If you wanted to go online, or you could even request from one of us, the chart that we use, it's the 2025 wage bracket method table. So if you go on IRS's website, you'll see several wage tables. You'll go to the monthly version, monthly payroll period. I'm showing that those who are claiming married are having less than 10% deducted for federal taxes. And even though those who are single, it's, I'm going to say it's just above 12% on average. But if you wanted to make absolutely certain that you're deducting enough, you might want to talk to a financial advisor before you enter into your pension status. That way you know that you're holding enough.
Sounds good. Good. All right. I believe this is the last question here. It says, I am not yet 65 years old and my husband is already 65 years old. If I retire, what insurance would I have, Humana or Aetna?
If you're under 65, you'll have the Aetna until you turn 65. Your husband would be eligible for Medicare and you would be able to enroll in the Humana. It is based on your Medicare status. So on the flip side of that, we do have those who are under 65 with a spouse over 65. I'm sorry, for those who are under 65 with a spouse who is under age 65, but they have Medicare because they're disabled. And it's based, again, not only on age, but your Medicare status. So basically, whatever is appropriate for you, that will be your insurance. And whatever is appropriate for your spouse, that'll be their insurance. It doesn't influence one way or the other. And you do have to have yourself covered in order to offer insurance to your spouse. You do not have to cover a spouse if you just want to take the individual plan.
Sounds good. Put everyone's contact information there. Hopefully you all can see that screen. I do want to thank you all for joining us today. I apologize if we have not gotten to any of your questions or if you weren't able to put it in the chat today. You can reach out to Angel or someone on the pension team. Again, their email addresses are on this screen. Feel free to take a screenshot of it or take a picture of it if you would like it here. Again, we will also send out this entire presentation along with these slides to you all after this presentation has concluded today so that you can check out the information that was provided and also reach out to their team if you have any additional questions. I do want to close out and say that today is a self-reported activity, as this was a wellness presentation provided to you. So you can report this for Motivate Me. You would just need to enter today's date into mycigna.com or the MyCigna app in order to report your participation. If you have any other questions for the wellness team, you can reach us at wellness@transitchicago.com or check out our website at transitchicago.com/wellness, where we put all of these types of seminars, events, races, art classes, etc. are going to be posted on that website. Thank you all again for joining us today. I hope you got some amazing information out of this. I know that I did, and I look forward to retiring soon, Angel. Everyone have a wonderful day, and we will see you all soon.
Thank you. You too.
Thanks, Angel.
Bye, guys. Thank you.
Thank you.